Today's topic, financial milestones you should achieve by the age of 40 as a high income earner. Now, if you've watched our videos before, you know that we work with physicians. However, in the YouTube world, if I only put physicians in there, we really limit our audience. So I have started using the term high income earners in a few more spots to try to get more attention on these helpful videos. So we will plug in the word high income earners. Clearly, this certainly applies to our physicians, but it also covers many others in terms of dentists, vets, lawyers, business owners, engineers. So we're going to walk through 7 items, and each item will maybe have a little bit more context to it. I want to walk through all of these. 40 is a big year. One, from an age perspective, where are we at as of today? And with any type of video or blog post or podcast about this is where you should be at 40, it's general, right? Some of you might be past this. Don't look back. Keep going. Keep going. Some of you might not be there yet. Some of you may be working your way up there. Some of you might be spot on, right? You got most of these, but not all of them. Don't take it as a personal hit if you have not hit these 7 or you're still working towards all of them. If anything, take that as a win that you're here and you have some targets now to aim for. And maybe it's not 40. Maybe you get it at 42 or 43 or later, but it should give you really good context and goals and things to strive for. So without further ado, let's get into it. All right, first up is the emergency fund. Yes, I pretty much talk about emergency funds in any broad topic financial video because it's that important. The emergency fund is vital. And if you're sitting here now and you're at 40 and we're talking about this as a milestone, this is no longer like, well, maybe you have some, maybe you don't. This should be established. You should have a set aside account, some type of high yield savings, the Laurel Roads of the world, the Ally Banks of the world, the Marcuses of the world, where they're giving you a good yield on your money. And it should be a significant amount of money. Now, you'll do the Google search, right? Some will say 6 months of expenses. I think it really varies based on your personal preference. Noted this in past videos too, where we usually will break into 2 different buckets per se. One that's truly sitting at the bank, but then also maybe some that's accessible and a taxable investment. So it's still getting a little bit better yield per se. So we break it down a few different ways. I think your life circumstances also really important. Dual physician household. You can really rely on each other. One physician household with stay-at-home spouse, all right? It gets a little bit trickier there. You're not a W-2 physician, but a 1099, right? You're a business owner. Cash flows go like this throughout the year. You got to keep some flexibility in there. This one can have a moving target. We could do a whole video on just emergency funds alone on the proper number. And even there, I'd still argue it's not correct because everyone will have their own tendencies there and also the number that fits correctly for their exact situation. But the main takeaway here for number 1 is you should certainly have a emergency fund established. It should be well funded and also in some form of a high yield savings where you're getting a good yield. A lot of brick and mortar banks, right? If your bank has a location that you can physically walk to, there's a high probability that the rate is not the best rate out there. So number 1, a well-established emergency fund. Number 2, high interest debt should be very low on the balance sheet, meaning a low number or completely gone at this point. Now, what's high interest debt? That's a whole other conversation. Here's where we want to push you towards. If you have high interest debt, usually the main culprits are this: personal loans, high interest debt in the terms of credit cards. Credit cards are probably your worst culprit in there. Personal loans can also get crazy. I would also maybe throw in car loans. Car loans are a lot more specific to getting to point A to point B. If you bought a car that's probably too fancy and you hear car loans and you start to get a cold sweat down your neck, maybe that does apply to you. But for most of us, let's just keep this simple. Credit cards, personal loans. And you might be thinking, really, in your 40s to take out personal loans? In the physician world, it's not uncommon for them to have to take out a small personal loan to connect the dots throughout their training in terms of income and living in more expensive cities, because a lot of the training is in larger cities that are more expensive. Looking at the New Yorks of the world, the Bostons of the world, the DCs of the world. Credit card debt, not uncommon. Our goal here by 40 though is it's out of the way. Credit card debt is at a point where you're paying that off on a monthly basis. Sometimes our clients actually like to pay twice per month because we never know when they're going to actually pull the files for your credit score. So they'll pay it twice per month to always keep that number lower. Regardless of when you're going to do that, our goal here is having those out of your way. Now, the one thing I did not mention, student loans. Student loans could also be a high interest number. At 40, I am going to hope for 2 things. One, depending on what your specialty is, hopefully you've already achieved public service loan forgiveness or very close to achieving that or on track to achieve it. If you are paying your loans off on a private perspective, a private loan in place, you're on a good path forward. Hopefully you took advantage of some refinancing opportunities when rates were low. So those rates are lower in there now. Student loans are also on this list, but usually not my main culprit here. I could also make the case student loans were part of you getting to probably where you are today, whether you're a physician, dentist, engineer, any of those higher degree professions. Student loans are going to be a factor here. But main one here for number 2 is high interest debt is very much out of our way and being kept out of our way. Looking at you personal loans, looking at you credit cards. Number 3, increasing your retirement savings. In a perfect world, right now, at 40, as a high-income professional, now the term high income could also mean a lot of things. Is that household income of $250,000? Is that household income of $800,000? Two different households. It also depends on where you live, right? $250 in New York City versus $250 in Oklahoma could be two different numbers. But we want to be very close, if not, hopefully, already maxing out a 401k plan or a 3B. Hopefully, also doing a backdoor Roth IRA every year, and ideally also maybe getting some money into some type of a taxable account, whether that's an individual brokerage account or a joint brokerage account with your spouse, significant other. But if you came to me as one of our normal physicians, $500,000 of household income, assume dual physician household or maybe one physician with a higher paying specialty, at a minimum, I would say we want to be maxing out a 401k every year, and we want to be doing a backdoor Roth. We're probably doing more than that. Maybe there's a government 457B plan in there we can take advantage of. Maybe you are doing a good amount to that taxable brokerage account. I'm not even getting into like HSAs and where they could play in here. But number 3 on your list, increasing your retirement savings and really having those cranked up. And whether you're watching this video and it's your aha moment to get them increased, also on an annual basis, when you're getting raises and step-ups in your pay or higher bonuses, whatever the example would be, try to always keep in mind increasing your savings with that higher pay whenever you can. If your 401k is not maxed out yet, try to get that maxed out. If you're not getting the full amount into the backdoor Roth, try to get the full amount in there. The HSA could be an example, but I'm just going to keep it simple, keep investment accounts. Maybe that's where you're getting into that brokerage account at that point. Number 3 on the list, one of your more important milestones, because time is starting to get a little bit shorter here, right? We had this conversation at 30, 10 years later, compounding interest just got a little bit shorter on us. Most powerful tool in all of finance, compounded interest. All it is time. You want to get that money in the market, let the time kick in there, and that's when we get that compounded interest. All right, number 4 on our 40 milestone goal list, major life expenses. I wrote down 2 here, but this is one that's obviously very personal to you. You could add a lot of different things here. 2 that I added, home ownership. There's a good chance that many of you, at least high income earners, are homeowners before the age of 40. Doesn't mean you have to be a homeowner. I always plug that in there. Renting can make sense for a lot of people. There's this stigma forcing upon the American dream that you have to own a home to make your financial plan work. But believe me, you can be very successful while renting a home, but doing a lot of other things right. So whether it's home ownership or just a higher rent number, that's one that comes to mind. Education planning for our kids. If kids are currently part of your life or they plan to be in the near future, they're expensive little buggers. But in terms of education, K through 12, if private school is on your list, that can get expensive very quickly. If you're blessed in an area where you have great public schooling, you're in a good spot there. Also, after K through 12, think about college funding. So that's where we started plugging like 529 plans and starting to get some of those details in there. But as a 40-year-old-ish watching this video and things that you should be accomplishing, you should be tracking and saving towards some of these major life goals. Again, I'm just using home ownership as one. I think kids education is another one in there. We're big fans of forced travel budgets for our clients. Again, physicians, burnout. We try to force in a lot of work-life balance. So having a purposeful account savings bucket per se for your travel needs on an annual basis, I think that's another good one. Or even like the bigger trips, like, hey, we usually do this during the year, but then every 5 years we do this big gigantic trip, having that plan in there. Number 4 for our 40-year-old list, major life expenses. All right, number 5 on the list, insurance. This one's not for you. This is for everyone else around you. We could argue the first one. Disability insurance is one where, heaven forbid, you wake up and you can't go to work. This would help you, but likely helping the loved ones around you as well. But you should have these dialed in. By the age of 40, we need to hike up the big boy pants, the big girl pants, and make sure that these foundational pieces of your financial plan are in place. You should have proper disability insurance in place, whether that's from your employer or a private policy, more commonly a combination of the both. Disability is one where I say it applies to everyone. You could be single with no family, no kids plans. You still need disability insurance. What if you can't go to work? How are you just going to pay the bills? Even if it's just you, still very important. As we add in more layers, it's even more vital. Life insurance, maybe you don't, not everyone will need life insurance, but if someone relies on your income, you should have life insurance in place. Maybe it's some coverage through your work, which we call group life insurance. Ideally, hopefully it's some low-cost term life insurance policy. None of that permanent stuff in here, but term life insurance would be another good fit in there. Number 5, our 40-year-old checklist to do: proper disability insurance, life insurance necessary to support really whoever you're supporting, whoever's relying on that income for you. Number 6, continuing education and professional development. Bet you didn't know that one was going to sneak in, did you? As a 40-year-old professional, 40-ish old professional, those early chapters, and we're now hitting the core of the book. This is where the story gets good. How are we going to rate these chapters? And that's really how I think of this topic in terms of continuing education. So really referring to your specialty. What are you doing in terms of advancements? Are you learning about new medical education? Are you working with new robotics? Is there some type of research that you're doing to further advance your medical career? Are there other income streams? Is there an opportunity for you to branch out and add a form of business ownership? Maybe this is a partnership opportunity. Maybe this is you buying into some type of surgery center. Maybe it's completely different side income. Real estate investing is very popular in the physician world. Maybe it's you getting your first rental property. But that continuing education, that continuing to learn, and I also put in professional development here because you need to be the best you. There's no other way to really sugarcoat it. Whether that's a physician, lawyer, engineer, financial planner, entrepreneur, whatever it would be, you need to be the best version of yourself. And investing in yourself is the best way to always make sure you're at the top of your game. And this could be as simple as taking time out for you, meditation, morning workouts, afternoon workouts, yogas, Pilates, just taking a walk for you, things of that nature where you're continuing to give yourself room to grow and think. I would say, I think we put not enough value on just sitting by yourself for a little bit and just having room to think. But that type of professional development, I put in financial literacy into this topic, family growth, all of those things. I think it's really important to continue to focus on continuing education, so more that professional side, but then also on the personal side, that personal development as well. Last but not least, I saved it for the very end, financial independence. Maybe you want to call it retirement. I think financial independence, one, fits with that younger demographic a little bit more. I feel like the term retirement is used for that 60 plus crew, 50 and lower. Maybe there's a little mix in there, a little cover, but financial independence is a better idea to think of it, where it doesn't mean we're just going to stop working, but just an area where we say, hey, we have enough put away to meet all of our future obligations. That's what I consider financial independence. 40 is a good time to sit down and get this organized. Whether you're doing this on your own, whether you're doing this with a financial planner, but what's the goal? How many more chapters are we writing in the middle of this book? Do you want to work till 70? Do you want to work till 65, 60? Do you want to be financially independent but 55, but cut it back from 55 to 65? What are the goals here? We add in vacation homes. Towards the end, we get back into some of those larger goals. What are we doing for kids' education funding? Having the goals in place, or at least the outline. It doesn't need to be perfect. I would say long-term financial planning is a bunch of assumptions, and then we let those assumptions compound over decades. You don't have to be perfect, but starting to get some ideas on, I can do this for another 30 years. I can't make it another 5 days, so get me the heck out of here. Starting to get that organized, whether that's with yourself, your significant other, your spouse. This is the time. At 40, you should start to put a game plan together a little bit better in terms of financial independence, retirement, whatever you want to call it. But very important chapter here to start thinking about what the future chapters are going to look like. Number 7 on the list, give some time, some thought. Maybe it's your first time getting a full financial plan completed, but financial independence and retirement planning and some of those longer term goals. What do those start to look like? 7 financial milestones to aim for by the age of 40 as a high income earner. If you're looking for more context on any of those 7 and even some more details on some of those topics we covered, check out the blog post down below in the show notes. As always, thanks for hanging out with me for the last 15 minutes or so. If you have not subscribed, now is a great time to subscribe to the channel. Click on the bell icon. You'll also get a notification every time we release a new video. We are sending out videos weekly now. Thanks for your viewership, the subscribers that continue to increase here, all the comments and all the love that we're getting, whether it's in our actual comments or even through the Google form, where a lot of individuals have been sending over questions and comments and thoughts on a lot of these. So please keep sending those our way. That's how I continue to produce videos that I know you're going to love. Again, thanks for hanging out with me. As always, I'll catch you on the next video.